So today I want to share with you a simple strategy which have got a very high risk to reward ratio. So without further ado, I don't want to waste time. Let's just get into the strategy. So if you stay with me until the end of this video, I'm going to show you this strategy, and also I'm going to show you a secret tip that you can use to maximize your profitability with this strategy. So let's get started. So before we get into the actual charts, I have to explain this strategy to you and show you how it works, so that when we get into the charts, I'm going to give you some examples and you're going to find out if this strategy is profitable or not based on the examples that I'm about to show you. So first of all, what do you want to see in any strategy? In any strategy, we want to have rules or conditions, right? So first of all, with this strategy, the first rule that we have is for us to place a buy order. Let's say we want to buy in this market. We want to look for a market which is making a series of lower lows, which is in a downtrend, making a series of lower lows. So what is a lower low? A lower low is just a low which is below the previous low, right? And we want to get the market when it is about to reverse. So for example, we have a lower low right there, we have a lower low right there. So what's the next thing that we see? First of all, we know that we have a lower low. If you don't see the lower lows, we don't place the trade. The next thing that we want to do is we want to go into the RSI indicator. So I'll show you the settings. They are all on default. You just go and put the RSI, and then you put the line 70 here and then the line 30, right? What you want to see on the RSI is you want to see the RSI going below the level 30 on a previous lower low, and then when we go to the recent lower low where the market will be at, we want to see that level being inside the level 30, and that gives us a good chance to trade what is called divergence. So this is called divergence. And what is divergence? Divergence is simply when the prices in the indicator are showing you different directions. So if the indicator is now showing you a potential uptrend which is by higher highs and lower highs, and then the price is still making a series of lower lows. So here, once you see this, you see the market in a downtrend like this, and then you see the MACD going below the level 30 and now showing you that it's about to go up. The next thing that you are going to be looking at is an end trigger. So what is an end trigger? An end trigger is something like a candlestick pattern, a chart pattern. In this case, we are only going to be using candlestick patterns to enter our trades, right? So let me explain the strategy one more time, step by step. First of all, you want to see the market which is in a downtrend for you to buy, right? This is a reversal trading strategy. So we see a lower low here, a lower low here, and then we see that the RSI have gone below the level 30, and then on this recent lower low, now the RSI is now inside between the level 30 and the level 70. And if we draw a trend line here, it's gonna come up like this. When you draw some on below here, it's gonna come up like this, which gives you what is called divergence. So let's get into the markets and let me show you this strategy in play. So on this example that I'm showing you right now, so what is happening here? We see the market was in a downtrend right here, and then if we mark out this level here and this level here, we can see that this level is higher than this level. So this is a lower low and this is also a lower low, right? And then if we come to the MACD, we can see that to the RSI, we can see that the RSI have gone below the level 30, and now on this point here, the RSI is now above the level 30, which shows you that momentum is shifting to the buyers, right? So what we would do here is drawing a trend line which connects this recent lower low to this recent lower low right here. So I'm just gonna connect the wicks only here. So this recent lower low and this recent lower low, and then we can see that on the MACD, this level right here is this level. So we connect from there up to this point right here, and then you can see that we have a good divergence. So once we see divergence, what's the next thing that we are going to look at is the candlestick patterns. In this case, we have got a bullish engulfing candle. So once we see a bullish engulfing candle, we are entering into a buy order, and we are putting in 3-to-1 risk to reward ratio, because this is a reversal trend. This is a reversal trade. So in a reversal trade, we can put bigger risk to reward ratio, because we are expecting that if the market goes in our direction, it's gonna be in our direction for a long time. So in this case, this was a winning trade. Let me show you another example. So here's another example right here. Of course, you're not going to get trades each and every time. You have to be patient for you to use this strategy, but it works very well. So in this case here, you can see that we are on the other side now. We have the market making a series of higher highs at higher highs, right? With the market is going up, it's making a series of higher highs. Let's look into the RSI. Right now, the RSI have gone above the level 7, right? So we're looking for this higher high to have an RSI below the level 70, but didn't, right? And then we have another RSI here above the level 70, and then we have this one. Now on the third one here, we can see that the RSI is now gone below level 70, but still the market is still showing you an uptrend. So how do you trade this? All you need to do is mark out this zone just to confirm your divergence. You mark this one, you can see it's a higher high. The trend line is going up, but if you connect this zone here to this zone, you can see now it shows you that the market have been reversing, right? So if I zoom this in, you are going to see that at this point right here we have a bearish engulfing candle. So this bearish engulfing candle was going to be your entry reason. So you are going to enter here, put your stop loss above this zone right there, and then you put your take profits 3 times the risk, right? So if you are risking $1, make sure you are making $3. If you are risking $10, make sure you are making $30 from that trade, right? So it will come up like this, and then you can see that the market dropped from there to hit your profit. Why? Because we have all the conditions met. We have the market making series of higher highs, and now the RSI have shown you that the market is losing momentum, but the market is still going up, but the RSI is showing you buyers are losing momentum, which means that market is about to reverse, right? That's how you trade using this strategy. I'm going to show you more examples right here. So as you can see here, from this point here to this point here, this was a higher high because the market is still going higher, right? And why do I call it a higher high? A higher high is any market that breaks its previous level of structure, right? So this market come here, drops, now it breaks above, it's now above right there, and then what do you see on the market, on the RSI indicator here? This zone right was here, and then this zone right here, this zone right here is now this zone right here, right? So I'm talking about this zone being this zone right there. So you are going to be placing your trades once you start seeing bearish engulfing candle. In this case, we saw our first bearish engulfing candle at this point here. So you are going to place that trade, target your three times your risk, and then you place your trade right there, and then you put your stop loss above the level that the market have reversed on. Or if you put a trend line like that, you're going to be putting your stop loss above the trend line, just like what I did right here. So the trade was going to be a very quick winner right there, because the market have already the RSI is showing you that the market is about to reverse, but the market haven't shown reversal for you right now. Here's another example, the third one. We can see that here we have the market making a lower low right here, and then we see that the RSI here got away out from the level 30, so it's below level 30, which means oversold, right? And then when the next time when the market created another lower low, we see that now the RSI was now above level 30. So if the RSI is above level 30, and if the market is showing you lower lows, but now we have a bullish engulfing candle right there. So we can see here we have a bullish engulfing candle here. So we're going to buy at this point here, put your stop loss below there, and then you take profits 3 times your risk. So in this case, as you can see, this happened exactly on a previous level of structure that I was already marking on the market. Here you can see this is a level which I marked a few days back. Let me show you. Let me show you what I mean. As you can see here, this is a level which I marked a few days back, and then later on the market came back into that same zone, created that same situation again for us to be placing a buy order. So one thing I wanted to show you here on this is, if you mark out these major zones here, these are the zones where you will be looking for things like this to happen, right? As you can see here, in this case we got 2 trading chances simply because it was happening on our level of structure, which we know that this is a level of structure. Here the divergence happened on the level of structure right there. Again here the divergence happened on the level of structure. In this case here it happened, but the none of the RSI went above 70, so we're not going to place the trade right there. So that's how you place your trades using this simple strategy. So let me show you the indicator settings. So the only indicator we have here is the RSI. So if I right click here, go to properties, you can see it's level 30 and level 70, and I haven't changed anything. Period 14, and then I click done, and then you have it, the RSI. So tell me in the comments, what do you think about this strategy? Tell me what are your thoughts about this strategy, and do you think this strategy can be profitable? Can we start using this strategy based on what we have been seeing? Here's another example. Here we can see the market creating from this point here to this point here a higher high, right? And then on the RSI, if we touch this point here, which is the same point with this one, and then we do this, you can see that now here we had a chance to place a trade at this point right there. So we're going to sell here, put your stop loss here, and then you take profits 3 times your risk and see what happens. So tell me in the comment section, what do you think about this strategy? Do you think this is a great strategy, or do you think we need to work on it more, or do you think you need another video which is a little bit longer, and then I will explain each and everything about divergence, about the RSI, and then how do we combine it to get this type of a strategy? So tell me in the comment section. I'll be waiting, and I'll see you in the next one.